Hi everyone, this is Ali Hussein Kasim of Alitalkstech. This week we are covering a couple of stories across Africa. We start with news from Nigeria, and then we'll move to Kenya. We will then move back to Nigeria, and then we'll look at a global story, the collapse of a fintech called Synapse in San Francisco. In Nigeria this week, the last couple of days, there's been some interesting news of a decentralized payment network called Zone that has signed up some of the largest banks in Nigeria to work or to operate on their blockchain decentralized payment network, which is already approved by the Central Bank of Nigeria. So Zenith Bank, First Bank of Nigeria, and UBA Bank announced this strategic move to join the Zone blockchain payment network to use it as part of their payment ecosystem. Some of the key highlights of this partnership is that Zone's blockchain-powered network will enable direct transactions between financial institutions, eliminating intermediaries and reducing failure points. So, who are these intermediaries that could potentially be disintermediated? I'm going to leave this for conversations on the part where we start having these conversations on social media and comments within the video conversation. But just to give you a brief synopsis on what this could mean, the global payment ecosystem has many players. It has the big card payment companies like Visa and MasterCard. It has players that operate on a global level that connect banks across the world. So what does this mean to these players? This will be interesting to see how that plays out. The other thing is that this is a fintech that has regulatory compliance, but not just a fintech. It is a fintech that has structured is switching technology using blockchain. And this is really the first payment infrastructure in Africa that is regulated that uses blockchain technology. This is quite interesting times. The other component which Zone claims is that this will give end-to-end transparency. The network will provide transparency, automatic reconciliation, same-day settlements, preventing chargeback, fraud, and ensuring seamless transactions. This interesting fintech was founded by Obi Ematorum, and its mission simply is to connect every monetary store of value by harnessing the power of blockchain. What do you think, guys, of this development? How will it impact financial services in Nigeria and beyond? As this plays out, just take note of the fact that 3 of the largest banks in Nigeria are now part of this Zone ecosystem. We now come back to my home country, Kenya, where last week we held an expressive conversation with senior leaders from the Ministry of ICT and Digital Economy in Kenya. And this discussion was really based on the ICT Authority Bill. Now, a bit of history is very important. The ICT Authority in Kenya comes under the Ministry of ICT and Digital Economy. Its precursor is the ICT Board, which was founded back in 2007. By 2013, there was a merger of different government agencies and organizations, including the ICT Board and the e-government department within the government and within the ICT ministry that then formed the ICT authority. From where I sit, from how I have understood the ICT board then and the ICT authority, the main mandate of the ICT authority and the ICT board, which is the precursor to the ICT authority, was to act as the government chief technology office or chief information office to make sure that the e-government operations are working in tandem to citizens' hopes and aspirations, accessing G2C services, which is government to citizen services, and C2G services, which is citizen to government services, become as seamless as possible, and ensuring that the disadvantaged populace in Kenya that may not have access to internet as a ubiquitous tool for everyday work and play actually are not shut out of government services. That, in a nutshell, is my understanding of what the ICT authority should be doing. It may sound simplistic, but if the ICT authority could focus on this, we'll have a country that will transform from a digital transformation perspective. Unfortunately, we are now seeing that there's a new bill to legitimize the ICT authority through an act of parliament that is now seemingly encroaching on areas that it shouldn't really encroach. This issue around regulating and licensing and accrediting ICT practitioners across the country. I'm happy to say that in general, there's a consensus within the tech community in Kenya that those components of the bill that talk about regulating, licensing ICT practitioners just need to be removed out of that bill and let the bill really focus on its core mandate. We're really hoping that the government, that the sponsors of this ICT authority bill have listened to the community. And the Kenya ICT Action Network, which is one of the organizations that has been championing this revision of the bill, has published a memorandum on this issue. You can go onto the on the KICTAnet website, that's kictanet.or.ke, to access those thoughts. Now we go back to Nigeria, where MoneyPoint, which is one of the leading fintechs/banks in Nigeria, has released a very interesting SME report. I think it goes without saying that more than 80% of all businesses across Africa are micro, small, medium enterprises. And most of these are in the informal sector. So when we see an organization of the stature of MoneyPoint really focusing on drilling down on what are the needs of MSMEs in Nigeria, that's a step in the right direction, and kudos to the team. You can view the report on my LinkedIn page. That's Ali Hussein Kasim, but you can also go onto the MoneyPoint website itself. You can access this report. Lastly, I want to speak to the collapse of fintech banking as a service startup based in San Francisco called Synapse, which is an embedded finance platform provider. It has just recently collapsed, declared bankruptcy, and this has exposed the underbelly of the vulnerabilities inherent in the banking as a service model, which will have significant implications for the fintech industry in particular and the financial services industry in general. It will lead to disruption, which already has, erosion of trust, increased regulation, and a renewed focus on resilience and risk management within the global fintech ecosystem. There are a combination of operational and partnership issues that ultimately led to this bankruptcy. Number one, operational and partnership issues. One key issue was that Synapse faced significant operational challenges, including a 13 million euro deficit in reconciliation with one of its major banking partners, Evolve Bank and Trust. This highlighted inherent risks where middleware can delay real-time financial reconciliation. Now, let me step back a bit here and wonder aloud. As a fintech person, die-hard fintech guy, this is something that has really gotten me worried and wondering. Wasn't fintech supposed to solve some of these problems? How then does a fintech fall prey to the same problems we in the fintech industry have been telling banks they have a problem with? I think this is a problem. This is an issue that the fintech ecosystem globally needs to take seriously and need to take cognizance of. And also understand that technology is not the only issue that we have to take into consideration. There are compliance issues, there are people issues. Tech is an accelerator. It's not a technology. I mean, it's not the nirvana or the answer to every problem that we face in financial services. Reality check, guys. Reality check. Another one, basic lack of proper management from a tech and operational bugs management perspective. Again, same issue. Regulatory and compliance issues. Synapse's architecture was unregulated, making it unlikely that federal officials will step in to help, as they did with Silicon Valley Bank last year. Any resolution would likely come through a potential settlement or court order, which has yet to happen. What are the implications of this? Huge impact on clients. This collapse has had a domino effect on its many partner firms, affecting over 100 companies. Many fintech startups such as Juno Finance, Yota, and Copper could not find new partners or had to pivot their business models due to Synapse's bankruptcy. There's a huge also financial impact. The collapse has frozen nearly $160 million from fintech users, highlighting the significant financial impact on the industry. Question: what are the lessons here for the global fintech and financial services ecosystem? Let me just say this. The era of moving fast and breaking things without making sure that you have both your soft and hard ecosystem issues resolved, those days are gone. Let me stop there, ladies and gentlemen. Looking forward to seeing you again next week. Thank you.